Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. Welcome back to the show, John.
Jim, pleasure to be back on the show.
John, why is consolidated wood jam trending down in a copper bull market?
Well, Jim, there are two things at work right now. One is the general sell-off in equity markets that is also dragging down resource stocks, whether they be majors or juniors. But the other is the failure by Consolidated Wood Jam to effectively communicate its story. Now, with regard to the sell-off, today was a particularly bad day where producers and juniors across the board, the bids were just being hit. There wasn't huge selling, a huge volume, but it's like everybody said, okay, I'm not around to buy anything. So stocks were down a fair bit today. Now, why is this happening? Well, there's been a lot of signs of toppy general equity markets in the past month or so. We had the crazy GameStop stuff at the end of January. We're seeing a lot of money piling into Bitcoin, like this is some sort of a special thing that's going to go to the moon and then make everybody rich who owns Bitcoin. But also stocks like Tesla and that, they've been all over the map. And when you go farther down this food chain, you see these SPACs are being taken over by some, private equity deal. And if it's got something to do with the electric vehicle market, battery technology, away she goes with valuations that are way ahead of themselves. But the biggest problem is that the main companies that make up the general equity markets, they already have priced into themselves the post-pandemic recovery. So there isn't a lot really to drive them significantly higher. Now, the expectation that come July or so, that people go on a spending boom, all these savings that they've been forced to pile up because there was nothing to spend it on, start buying goods and services. This will cause the economy to boom, but it'll also be this huge surge of demand that could push up inflation. And inflation has been a non-event since the 2008 crash. Now, why gold has retreated from 2000 level to today it broke $1,700 on the downside when we are having these inflation expectations in the market, I do not know. It makes no sense. The best explanation I have is that people, now that the Trump administration is over, the uncertainty posed by his policies in geopolitical terms is not as intense, so the reason to own gold is less. But there's still going to be a good reason to own gold as an inflation hedge down the road. I think another problem for gold is that the retail investors who hold it, they have been busy dumping their GLD, which has had daily declines almost relentlessly since that first week of the year, which was good for gold, and they may be pushing it into the Bitcoin market, which has had an uptrend, or into anything that's got big volatility. But the big theme that's been haunting the general markets for the past few weeks has been the rising yield of long-term bonds. And this is supposed to be in response to expectation of inflation driving up interest rates. The Federal Reserve has signaled no, they are in no hurry to ease monetary policy. But I think what's really happening is people who own these bonds that have increased in principal value so that their yields are extremely low are looking at this situation saying, well, if we do get a booming economy, it will eventually bring inflation back. It will cause the Fed to raise interest rates, which will make bonds go down. So let's preemptively get rid of this stuff, which is not yielding us anything, save ourselves the losses that would come by just staying in these bonds. And so they're hitting the bid. So it's not like when the economy is about to crash and everybody piles into bonds and you get a inverted yield curve where the long-term yields actually go down because people are chasing the stock on the bonds on the ask side, driving it higher. You really have a situation now where people are fed up. They're starting to liquidate those bonds. Somebody is buying them passively, but they're doing it at ever lower prices, so that's causing the yield to go up. And that to some degree is spooking the market, the general market in general, and there's all this excess in it that becomes an additional reason to sell. So there's this idea that a reset in the general equity markets is bound to happen, and it is now underway. Now, we've had comparisons between the roaring 20s and the depressing 30s as to what comes after this decade-long bull market. And in the roaring 20s, when you look at the Dow, its behavior back then, it was a modest uptrend for all but the last couple years in 28, 29, when it went exponential on the upside. So that was a tremendous decade of coming back from World War I and the Spanish flu pandemic. And I think we could be facing something similar for general equity markets, where it's going to be a while where before the economic recovery ends up producing numbers that justify these bigger companies going substantially higher. So we may be facing a modestly uptrending general market after a bit of a reset, assuming the economy does get back underway once the vaccine rollout has been accomplished. But all of this makes it completely incomprehensible is why are the resource juniors, not just the gold ones, but all of them involved in base metals and critical metals, being sold off in the past week and especially today? Because if we do have a booming economy, we will see a surge of demand for physical goods. The Biden administration has also threatened to follow up its recovery stimulus plan of $1.7 trillion with infrastructure renewal, fiscal stimulus. So all of that should cause demand for raw materials to go up. And we do see copper over $4. We've seen companies like BHP and Freeport do extremely well, but they got shellacked also today in this market pullback. I think this is going to be a temporary phenomenon. The electric vehicle build-out now seems to be real for certain metals in the critical metal sector, and also copper and nickel. The medium to long-term demand that the electric vehicle build-out will create is bigger than what the current supply infrastructure is set to deliver. Because during the past decade, the mining sector has been busy rationalizing its operations, not putting new mines into production. And even this past week, we heard Mark Cutifani from Anglo American saying, yeah, we love these high metal prices, but we're not stupid. We had rough time in 2014 when everything hit the wall. We're going to enjoy these high metal prices. We're not going to go out and acquire things and build new mines. We know how this boom-bust cycle works. We're going to enjoy the boom prices. And of course, what this does is build in the usual supply-demand imbalance as the global economy booms and ends up demanding more than the existing mines are able to supply. So this is an emerging sweet spot for at least the non-gold juniors that are looking for copper. And so the sell-off across the board, this indiscriminate sell-off, it's going to end up being a great opportunity for bargain hunters over the next few weeks as this whole market reset settles out. Now, returning back to consolidated wood jam, we've been talking about mainly for its Deerhorn zone on the wood jam project in central British Columbia. That is a gold-enriched copper zone. There's only 35 million or so tons delineated by Goldfields back in 2012 to 14 before they were forced to shut down their overseas operations. And the company spent $1 million last year drilling 3 holes. And while these holes delivered better gold grades than Goldfields had achieved when it drilled off this system, the the holes managed to not deliver a lot of new information about the tonnage implications. So the market has been a bit bummed out since we last talked about it. We got the final results for the last hole. But what the market seems to be overlooking, or maybe it is completely aware of it, and unhappy that management seems to be overlooking it, is that the same wood jam project has the southeast copper zone, which is about 228 million tons of 0.3% copper with a minor gold credit. And this gold credit itself may be understated because there are gold-enriched structures within the copper system which may not have been drilled at the optimal angle and which could result in a higher grade. Plus, Goldfield used a very punitive metallurgical recovery assumption in quantifying the gold content. So while this thing looks like primarily a copper deposit, it could be something better. But to the northeast is a project called Megaton, which Goldfields was forced to limit the size of the pit because you can't build a pit beyond your property's boundary. And they didn't get an option on the adjoining project until about 2013, by which point Goldfields was winding everything down, and this deal required them to drill 5 holes on the property right away that same year. So Goldfields, without any geophysical data, went and drilled 5 holes, and one of them was in this area to the northeast. And eventually Goldfields gave up. Consolidated Wood Jam got the project back. Goldfields is still a 15 to 19% shareholder of Wood Jam, but for most of the past 5 years, Wood Jam didn't really do anything on this project until this year. But one of the things they did do was an IP survey on the Megaton project, and there'd been partial IP on it, but it didn't really make sense. And when they did this, and they published the results today, it showed that there is a dumbbell-like anomaly, is a clear one associated with the southeast zone, and another one about 3 to 6 kilometers to the northeast, which is what they call the megaton zone. It's not quite as intense, but with IP surveys, it doesn't have to be intense to be something similar. One hole drilled by Goldfields was quite close to this anomaly. It was actually outside the anomaly, but they did intersect the sort of copper-gold porphyry-style mineralization, very weakly mineralized. But when they looked at the geochemistry, they said, okay, this appears to be part of the same system that created the southeast zone. Obviously, the grade's not very interesting, but by then South Africa had pulled the plug on Goldfields and no more further work was done. Well, this IP survey shows that there is a potential doubling of the copper-gold porphyry system already present at the southeast zone. And what they need to do is go in there with half dozen or so scout holes and just test these IP anomalies to see what is there. And of course, it may be just disseminated pyrite that's there with very little copper gold. But until you drill it, you don't know. So the market's been looking at this and saying, okay, guys, you have a couple $1 million left in the treasury. The Deerhorn results are inconclusive. And now you're dithering. You're not signaling to us what you're going to do next. We're in a strong copper market. Copper's at $4 a pound. Everybody's saying that unless the EV mania completely evaporates and we all go back to fossil fuel cars, the copper market's going to be strong for a long time. So you need to be stepping out, drilling this to see how big this system is, and even if there's nothing of interest to the northeast, be prepared to go back and start doing economic feasibility demonstration on the main southeast zone, and then maybe go back to the Deerhorn later this summer to chase the gold to see if the gold-enriched zone is bigger than Goldfields delineated. And so the stock has been sinking simply by this sort of apparent indecision. And they could have drilled earlier this year when everything was frozen, but we had such a warm winter that it's unclear that it would have been worthwhile to try and drill when these roads were not properly frozen. Now they're waiting perhaps for an early spring that actually dries out things earlier, so conceivably they could get in there by late April, but for sure by May be in there and mount a drilling program, because the name of the game is to beat the Golden Triangle rush that's going to come in the summer. The Golden Triangle can almost always deliver better gold-copper intersections than the rest of British Columbia. So why would this company sit here and dither instead of saying, we're going to go in there and start drilling this? And yes, maybe the whole market goes into the garbage can and stays there, and we are facing a 30-style depression rather than a roaring 20s. But you've got to take this chance, and the market will respond. And then before you know what the results are of the megaton drilling, you raise some more money so that you can, continue drilling at the southeast zone to upgrade it and carry on trying to figure out how big the gold potential is at Deerhorn. So consolidated wood jam is down because of the general malaise in the past week, people selling off everything, but it's also down because the company has not clearly signaled to the market that it's prepared to go out there and start drilling at wood jam before the Golden Triangle rush pretty much grabs the limelight.
We'll have more with John Kaiser right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with John Kaiser. John, Northern Crown released results for its Broken Hill type target at its Gumsberg project in Sweden this week. Why did the market yawn?
Well, I introduced the Northern Crown and this Gumsberg story to Discovery Watch on January 13, based on the visuals of these three holes that they had drilled 30 to 60 meters down plunge of the Frederickson Gruva mine that small-scale operators had taken down to, 75 meters or so, and they chased zinc, lead, silver enriched mineralization. It appears to be of a Broken Hill type. The company's hypothesis is that as you chase this down plunge, this system will thicken and perhaps even get richer. And from the visuals that they wrote about in their press release, it was apparent that the thickening was happening. We, of course, couldn't tell what the grades would be, but the grades that they put out today, the three holes, they were from 8 meters to almost 14 meters. And they had sort of 270, 257 gram per ton silver equivalent values. They are thicker. The grades are good. But to a large degree, we were already expecting something like this. And the stock, they did a huge financing last year, 47 million units at a nickel and a half, and they have 47 million warrants at 11 cents, and they're down to about $300,000. And the market's looking at this. It's also looking at the general sell-off. If this general sell-off weren't happening, we would probably see the stock trying to chew through that 11-cent lid. But the market may also be hesitating. Maybe you need to do another financing at these levels, beef up the treasury a bit. But the most important thing that the company really needs to do is this detailed UAV mag survey that they want to do. The only magnetic data that they have in this area is old government 500-meter spacing. It was actually the basis for drilling done in the 70s by some company looking for iron deposits associated with these iron formations in this region. And a couple of holes were drilled in the vicinity of this target that they have created by modeling what is known. And it looks like a Mick Jagger tongue that starts at the little, part open pit and then part underground mine, and then just expands down to about 400 meters. But the market looks at this and says, yeah, you can draw a pink blob on the map, but we want to see more evidence that there is something there, and obviously drilling some deeper holes into this to show that, yeah, there is this thickening that is associated with the folding that takes more typical ocean floor SEDEX-type deposits and remobilizes the mineralization, enriches it, bunches it up, creates a bigger zone suitable for underground mining. We want to see either drill holes into that for which you don't have the money, or we want to see you upgrade the target, give us some better graphics, show us that if you drill these holes, we will get thicker intervals of the same sort of grade. And there are such deposits in Sweden. The biggest ones, of course, are Cannington and Broken Hill in Australia. They are absolute giants. But the Swedish version, it's called Zinc Gruvan. It's a cluster of deposits. It's about 75 million tons, and the silver runs 80 to 100 gram, and the zinc runs 9 to 10% zinc, and the lead 3 to 5% lead. So if you found something like that, Norden Crown would be an off-the-scale winner. They don't need to find something quite that big, but they need to develop this target better. They need to raise additional money. The stock is stalled because of this. They do have a farm out underway to Boliden in northern Norway. It's called the Burfjord. It's an IOCG project. They have started a 3,500 meter drill program. They only net 20% at the end of the day when Boliden elects all its rights to keep earning a bigger interest. But it's a big IOCG footprint. Boliden is looking for something substantial. They've already had intersections such as 32 meters of 0.56% copper and shorter intervals of richer copper. But if they were, say, in the next 2 months, and this program has to be pretty much done by May, because in May, up there in the very tip of Norway, spring thaw sets in, and the reindeer calving season starts, so all exploration gets shut down until that is over. So there is a chance that these 3,500 meters, probably 400 meter holes, might deliver the sort of big intersection that tells Boliden, yes, this is why we farmed into this. This is going to be a great story. That might help out the company, but I wouldn't really count on it. It's going to be all about the company getting that geophysical survey done, and they can work at the Fredriksson Gruva project year-round, get the geophysical survey done, show the market that this target is significant, give us more money, maybe even some of the deep-pocketed people, groups like EMX Royalty, which are large shareholders, or Paul Stevens, might exercise some of their 11-cent warrants early so they don't have to do a brutal private placement at these levels. But yes, the market yawned because we kind of knew that these results were coming, and we're now dealing with a general pullback in the market, and the company needs some more information about the project and raise some additional money so that it can hit this target, chase it down plunge, and show that this is indeed an expanding Broken Hill type system with elevated zinc, lead, and silver values.
We'll have more with John Kaiser right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with John Kaiser. John, do you have any new exploration stories for Discovery Watch?
Jim, the company I would like to introduce is Searchlight Resources, which is headed by CEO Stephen Wallace, a geologist who at one point worked for Goldcorp, and whose cohort that takes care of the marketing aspect, but who's also a geologist, so knows exactly what Stephen is talking about when he talks rocks. It's Alf Stewart, who used to be a broker in the Vancouver brokerage sector, and he retired from that a few years ago. He still has this huge network of people. So for the past year, he has been working with Stephen Wallace to help fund the company, bring in an audience that includes, European investors, and finally give the property portfolio that Stephen has assembled a chance to deliver itself. And Stephen is focused on Saskatchewan. The flagship project is called Bootleg Lake, and it's a group of claims in which they have a 75% option from a sort of semi-private company run by Warren Stanier, and it's just about 6 or so kilometers southwest of Flin. Now the Flin camp is huge, is known for its VMS deposits. There's the Flin deposit itself, and this has they've mined 144 million tons of VMS ore from 27 mines in a 20-kilometer radius around Flin Flon, which straddles Manitoba and Saskatchewan. And this camp is almost depleted, though Kalinex seems to have finally found something significant on its property, Pine Bay property, and on the Manitoba side. But Hudbay, which has been the operator there, seems to be on the verge of shutting down the smelter and work at its 777 deposit, and it hasn't really put much effort into looking for more VMS deposits. It's acquired projects, big porphyry copper projects in the United States and in South America. So the Flin Flon district is kind of dying in VMS exploration terms, which opens it up for the juniors to pick around and see what's going on. But the gold potential, it's been there, but it's never been significant. There are these greenstone belts in there. There are these 30, 40 kilometer shear structures that run through. The Bootleg Lake project straddles about 8 kilometers of one of these shear structures, and it is displays off it that have attracted in the past. The Henning Maloney zone was mined in 1933 to 1944, shut down during the war period. And then a Canadian junior, a VSE junior called Vista Mines, in the late 80s, developed the Rio mine and mined that until it was bankrupt in 1989. And collectively, they outlined historic resources of about, under 100,000 ounces, but it is high-grade ounces, sort of 10 to 15 gram per ton. And what the company has started now is a 3-hole drill program under the old Henning Maloney workings. These were only chased down to about 30 meters. Stephen Wallace thinks that this region has potential for these quartz vein, golden-rich quartz veins to end up being a bulk tonnage type target where he could have a series of open pits on these zones and then chase this down deeper. These are orogenic systems, so you can, the vertical extent is not constrained as it is with epithermal system. So they've got this 3-hole program chasing the Mahoney, the Henning Maloney zone, down plunge about 150 meters just to see how it behaves, and also to see how the mineralization between the primary zones also behave. And the idea is if they can demonstrate that yes, this stuff does continue down, that we could legitimately stretch the intervals, the high-grade shoots, which are typically half meter to 1 meter, running 90 grams per ton, sometimes a couple of 100 grams per ton. We can stretch this into a larger zone that can be open pit mined. There's other splays in this property package that need to be looked at. We can build maybe a 1 to 2 million ounce system out of an area that has not been hit very hard by exploration in the past 100 years. And they also have one hole planned for the BD South property, which is about 15 kilometers to the north. This is interesting. They call it the Flin North Project, and they did a geophysical survey over it, which highlighted a mag-EM anomaly. It has about a 300-meter strike. It has never been drilled. It's in a swampy area, so there's no outcrop or surface soil geochemistry to have any clue. It is the sort of VMS target, obviously not going to be a 62 million ton Flin monster, but it is something that if it is a massive sulfide polymetallic deposit, this could be very quickly developed and fed into the Flin Flon system, from which is just 15 kilometers down the road. They will drill one hole across this anomaly to see what it looks like, targeting it about 150 meter depth. Do some downhole geophysics if they don't hit, to see if it's anywhere nearby. But that's kind of a long shot play. There's no other such VMS deposit in the immediate vicinity, but you have to hit these types of targets. The main reason, though, for looking at Searchlight Resources and its Bootleg Lake target is to see if they can turn this old minor gold district into a major new gold district through the exploration efforts that they have. And today they just announced the financing of just under $1 million at 8.5 cents. So it's a cheap stock, but they've got good people working it, and they've got a story whose potential, hopefully over the next 2 months, they tease out by showing that, yes, these zones have running room at depth, and they hang together in a way that we need to keep drilling this and delineating a gold resource.
John, thank you so much for the update.
You're welcome, Jim.
We've been chatting with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.